Have you ever heard the phrase passive income and immediately pictured some magical button that showers you with money while you relax on a beach somewhere? Yeah, same here. But today, I want to show you what passive income actually looks like. The real version, not the fantasy, not the YouTube guru ads, not the Amazon automation traps, and definitely not the this crypto coin will 10x next month scams. Before we get into the numbers, here's why daily DCA into the S&P 500 is one of the best passive income strategies you can possibly choose. First, you don't need a lot of money to start. Even a few dollars a day can compound into something meaningful over time. Second, you don't need any special knowledge about the stock market. No timing, no predictions, no guessing the perfect moment to buy. You just invest consistently and let the market do the heavy lifting. Third, it's truly passive. Once you set it up, you don't touch it again. No monitoring, no stress, no emotional decisions. Your only job is to let time work for you. And that's exactly what I did for the last 2 years. I automated daily investments into the S&P 500, and in this video, I'll show you the real results. Let's start by clearing the fog, because passive income is probably the most abused phrase on the internet. Real passive income is money that keeps coming in even when you stop paying attention. Not instantly, not magically, but consistently. You set up a system, you let it run, you step out of the way. Think about it. Dividends, index funds, automated investing, a rental property with a manager, royalties from something you created once. These things keep paying you without requiring daily decisions. Now, what isn't passive income? Day trading, crypto pumps, Forex robots, dropshipping gurus promising you $30,000 per month, anything that requires constant monitoring or selling you a dream. If someone tells you they have a system that prints money while you sleep, remember, if it sounds like a fantasy, you're the product. Real passive income exists, but it's not instant, and it's not sold in a $999 course. It's built slowly, quietly, and mathematically. Let's destroy 3 myths that keep people stuck. Myth number 1, you need a lot of money to start. No, time matters more than money. If you can invest a couple of dollars a day, you're already ahead of most people. Myth number 2, you need to pick the right stocks. Also no, most stock pickers lose to the market, even the smart ones. Passive investors consistently outperform active investors over long periods. The data is overwhelming. Myth number 3, you need to time the market. This is the most dangerous one. People wait for the perfect moment. But while they wait, the market grows, dividends compound, and inflation quietly steals buying power. You don't need to be brilliant. You just need to be consistent. And nothing is more consistent than daily automated investing. Before we talk strategy, let's define the thing we're investing in. The S&P 500 is basically the scoreboard of the 500 biggest, strongest companies in America. The Apples, Microsofts, Amazons, Googles, Nvidias, Visas, Cokes, and hundreds of others. Investing in the S&P 500 means betting on the entire US economy, the most innovative companies, decades of historical growth. And here's the wild part. Through inflation, recessions, wars, bubbles, crashes, everything, it still averages around a 10% annual return over the long run. You're not betting on one company surviving. You're betting on human innovation continuing. DCA, dollar cost averaging, is one of the simplest strategies ever created. You invest a fixed amount on a fixed schedule, no matter what the market is doing. $1 a day, $5 a day, $10 a day, whatever. When the market crashes, you buy. When the market soars, you buy. When nothing happens, you still buy. The beauty of DCA? You completely remove emotions. You buy more when prices are low, less when they're high. Automatically. It's the closest thing we have to set it and forget it investing. Let's get into the math. 1, timing the market is almost impossible. If you try to buy the dip, you will miss it. If you try to sell the peak, you will miss it. Even professionals fail consistently. 2, missing just a few good days destroys your gains. Miss the best 10 days over 20 years? Your returns get chopped in half. Miss the best 20 days? Your returns drop near zero. And guess when the best days usually happen? Right after the worst days, when most people panic sell. 3, DCA keeps you invested in every condition. Recession? You invest. Recovery? You invest. Bull market? You invest. Boring market? Still invest. 4. DCA into the S&P 500 has never failed long term. Historically, 10-year periods, positive 95% of the time. 20-year periods, positive 100% of the time. Mistakes kill investors. DCA eliminates mistakes. 5. The psychological advantage. Most investors lose because they react emotionally. Fear, greed, panic, FOMO. DCA says, no thinking, no stress. I'll invest whether you're asleep, on vacation, or watching Netflix. Let's take the year 2000, an absolutely terrible year to start investing. Investor A tries to time the market. He buys on news, sells on fear, waits for signals, reads predictions, and still loses. Investor B invests daily, automatically. He doesn't try to be clever. He just shows up every day. Who wins? Investor B by a mile, because even mediocre consistency beats brilliant but inconsistent timing. Monthly DCA is good. Daily DCA is better. First, you get more entry points, 20 to 23 per month instead of 1. Volatility gets smoothed even further. Second, daily investing kills excuses. You can't take a break. You can't wait for better prices. The system invests even when you don't feel like it. And this brings us to the final chapter. All right, now let's talk about my results. Because I didn't just talk about passive income, I lived it. 2 years ago, I set up a simple rule. Invest $5 every single day into the S&P 500. Automatically. No exceptions. No timing the market. No checking the charts. No predictions. No emotions. Just pure consistency. And here's what happened. Over 2 years, I invested a total of $3,650. That's it. And today, that fully automated portfolio is worth almost $4,500. That's a 23% return, completely hands-off. No research, no stress, no buy-the-dip nonsense, just a system running in the background while I live my life. And here's the crazy part. That's $850 of pure passive profit. Profit that I didn't work for. Profit I didn't trade for. Profit I didn't gamble for. Profit that grew even when I was sleeping, working, traveling, or doing absolutely nothing related to investing. If I break that down, my portfolio generated about $1.16 every single day, automatically. So for every $5 I invested, the market handed me $1.16 in passive income, all while I did literally nothing. And remember, this is only 2 years. 2 years is nothing in investing time. If you keep going long enough, something magical happens. Your returns start growing faster than your contributions. Your passive income overtakes your deposits. And one day you wake up and realize the market is paying you more than you're investing. That is the moment your money works harder than you do. That is the moment passive income becomes real freedom. And that is exactly why I believe DCA into the S&P 500 is one of the simplest, safest, most powerful wealth-building strategies that ordinary people can actually stick to. But now I want to hear from you. Would you commit to investing just a few dollars a day if it meant building true passive income over the long term? And if you're already investing, what's your strategy? Let me know in the comments below. If you found this video helpful, make sure to drop a like, subscribe for more beginner-friendly investing content, and hit the notification bell so you never miss a new video. Thanks for watching, and remember, your future wealth is built by the small decisions you make today. Start now. Stay consistent. Let compounding do the heavy lifting.